why joining us is Ms. Ginger Chapman, lawyer and political analyst, to unpack the legal, political and economic stakes of this unprecedented move. Ms. Ginger, good evening, good afternoon to you. Trump's move against Lisa Cook is being seen as an institutional red line. What makes this situation unprecedented in Fed history?
Yes, well, thank you, Mona, for having me today, and greetings to your viewers. And the independence of the Fed has been a long-running controversy in the United States. Of course, President Trump is the first president to actually bring this to a head and challenge the independence of the Fed. As we know, as we've seen, the Federal Reserve plays a very important role in our economy, setting interest rates. They actually print our currency and charge us for printing the currency, which our Treasury Department could do at a lower cost. So we're at a point in America's economic history where the American people are viewing the Federal Reserve with some suspicion. They're a relatively new institution. They were established in 1913. And there is the perception that the central bank, there's one argument: the central bank is needed to control the American economy, jobs, employment, interest rates. And there's the other perception: the Federal Reserve and the central banks are manipulating the American economy more for their own ends as opposed to for the greater good. Now, the Federal Reserve has a great deal of influence on our economy, but they are unelected. And as we saw during the Biden administration, the inflation, it was very easy for Biden to blame that on the Fed. But ultimately, one of the reasons Kamala Harris was unsuccessful in her bid for the presidency is because of the Federal Reserve and their interest rates. So even though the Federal Reserve is unelected, and they could be seen as unaccountable to the American people, they have a great deal of influence on American politics. And that is why President Trump is going for the Fed. He's been saying he wants them to lower interest rates. He thinks they're keeping interest rates high only to thwart his economic plans. However, the Federal Reserve is also looking at employment. Our employment situation is chaotic, not just the federal firings, but the mass deportations and leaving of migrants who are a very large part of our workforce. So, but most importantly, Trump says that the Federal Reserve is keeping interest rates high on housing. And high interest rates on housing is dampening our housing market. Families cannot afford to buy homes. This makes it look like Trump is failing economically. This is why he is now butting heads with the Fed. And Governor Lisa Cook, unfortunately, her situation is, in America, we have to get mortgages for our homes and our properties. For your primary home that you live in, you can get a cheap, lower mortgage rates. Governor Lisa Cook has 3 homes, and she claimed all of those homes as her primary home, which is, of course, unlawful in this country, misrepresenting the documents. You can get a low mortgage rate on your primary home. You pay a higher mortgage rate if you are fortunate enough to have a second home, and then any investment properties, you pay a much higher mortgage rate on your investment properties. So it appears that there are irregularities.
It appears here that it is a kind of fraud case. Now, but legally speaking, does the president have the authority to remove a Fed governor under these circumstances? And what does for cause actually mean here?
Mona, that is an excellent question. You cut right to the heart of the matter. The phrase being fired for cause For cause is undefined in this context. And because it's undefined, that means the courts don't really know what to do. So that's why this is actually going to go to the Supreme Court for the Supreme Court to determine what for cause means. We saw Governor Cook immediately file a complaint against Trump saying that she can only be fired for cause, and her mortgage irregularities are not cause. She would argue cause has to do with the performance of her duties, carrying out the specific responsibilities under the Federal Reserve. She will argue that for cause has to do with no other aspect of her personal finances or her personal affairs. However, in America, people that have a great deal of responsibility are held to a higher standard. Our judges are held to a standard of they must appear beyond reproach. So it is likely that Chairman Powell will hold Lisa Cook to a higher standard. We did see in the past, Chairman Powell has forced out two presidents of the Federal Reserve. He forced them out for insider trading or what appeared to be insider trading on the stock market. Once again, they have to be above reproach, no appearance of impropriety. So the two forced out presidents of the Federal Reserve, they will say they resigned. However, indeed, Chairman Powell can apply political pressure to force them out. With Lisa Cook, it is unlikely he will apply the political pressure because the politics involved. We see Powell is antagonistic towards President Trump. Trump is calling Powell names, too late Powell. So there is no love lost between Powell and between President Trump and Chairman of the Federal Reserve, Jerome Powell. So if Powell stands behind Governor Cook, this will go all the way to the Supreme Court. And in the meantime, this will leave the American people in a disarray because we want resolution to our mortgage interest rates, which are at their highest point in decades. We would like clarity on our jobs reports, on our unemployment, all within the purview of the Federal Reserve, rather than this personal battle between Governor Cook and President Trump.
Now, Ms. Chapman, let me get it clear from you. Is this really about mortgages or mortgage applications, or is Trump sending a kind of warning shot to other Fed officials? And what does this struggle mean for Jerome Powell's positions, particularly that his chairmanship expires in May, but he, as the governor, or his position as the governor, runs until 2028? What is this whole situation is all about?
Yes, well, as we've seen, President Trump actually threatened to fire Chairman Jerome Powell several months ago at the beginning of his term. President Trump cannot remove Chairman Powell because it is an independent position. The chairman and the governors of the Federal Reserve are nominated by the president, but then they have to be approved and confirmed by the Senate. So they're saying only the Senate can remove us, and we can only be removed for cause. Once we're nominated, the president has no authority. We're independent. We do see that President Trump would like control over the Federal Reserve, and we do see Trump is not shy about threatening to fire and remove people with Chairman Powell. There is a danger for the United States if the president is viewed as having too much control over the Federal Reserve. We might see a situation like Turkey where the battles between President Erdogan and between their central bank, their battles create enough disruption that neither can get anything done. So in a way that harms their economy.
That brings me, Ms. Chapman.
China.
Yes, that brings me, Ms. Chapman, to ask you, How are markets reacting so far, and what would a political compromised Fed mean for long-term economic policy and global investor confidence?
Well, so far our markets are reacting calmly to the Federal Reserve. This is a very old battle between presidents and the central bank. The presidents always want the central bank to lower interest rates to make conditions better for hiring, while the central bank does not want runaway inflation. They do not want the economy to heat up too much. So the Federal Reserve has to walk a fine line. The markets seem to be reacting calmly to this battle because there's nothing new here and they know this will take time to play out. And indeed, the markets are very good at baking into their numbers all of the conflict and volatility that might arise from the Federal Reserve, specifically with jobs numbers and a few percentage points, fractions of a point with inflation. The bigger battle is really the independence of the Fed. Would we move to a model like China, where the Chinese government and their central bank are on the same page? They are in lockstep. The mortgage rates are exactly what the president wants. They have no inflation, or they have very low inflation. So the Chinese model is not as frightening as the people who want the independence of the Fed make it out to be. When the Fed is independent, there's also stability. However, when we see the president and the Federal Reserve, when they're battling, that causes uncertainty. Right now, mortgage rates are so high that this cannot disrupt the market for mortgages anymore. The stock market has everything baked in. This is going to become a political power battle between the president and the central bank.
Right. So in this case, can we draw parallels to the Nixon era, when the Fed was pressured into keeping rates artificially low, and what were the consequences then?
Well, during the Nixon era, that was a time of great volatility. Ironically, we also saw that was when President Nixon traveled to China, reached out internationally. However, the biggest difference is at that time, the United States, we were on the gold standard, and we had a great deal of debt from our previous wars, and other countries were cashing in their debt and demanding American gold. We did not have enough gold to pay off our debts. That is, interestingly, one of the first times that America defaulted on our debt. We went off the gold standard in 1973. So we are not in a similar economic condition as when President Nixon went off the gold standard in 1973. We also saw that was followed by a period of economic malaise, Jimmy Carter, stagflation coupled with inflation, the worst of all worlds, low wages and high prices. So the 1970s, we also had the oil embargo, another self-inflicted wound. The oil embargo, where we were embargoing oil from Iran, so our economy crawled to a standstill. We had cars lining up at gas stations trying to fill their tanks with gas. So in one sense, things are very different now than in Nixon's era. However, history does repeat itself. We do see larger picture. The United States is once again butting heads with Iran. We are in a period of incredible volatility in the Middle East. The American dollar, some say it's in a decline because of the BRICS and other countries trying to create alternative currencies to trade with than the dollar. On the other hand, the US dollar, if the dollar's weak, it can help the American consumer. It makes goods cheaper for us. It's a double-edged sword because it also makes it harder for us to pay back our debts. So this
Ms.
all ties
Chapman,
in. Mhm.
at the Nixon era, we've seen the petro dollar issue. So what are we supposed to be seeing at this stage?
President Trump would like a strong dollar because that is a sign of American economic strength. However, the reality is our economy is in a chaos. Our jobs market is in chaos.
Right.
We don't know. Our jobs market is in chaos because
Yes.
of immigration. Our monetary policy is in chaos because we do not know if it helps us pay our debts with
Right.
a strong dollar or if it hurts the American consumer to
Yes.
have a strong dollar. So, so we are at a very conflicted time.
Yes.
Strong
And
dollar,
it
a
remains to be
strong dollar
seen.
help.
It remains to
Yes,
be seen. We thank you
yes,
so
we are
much.
at economic chaos. The Cook trial will go to the Supreme Court. The Supreme Court will have to decide what
Right.
for cause means. In the meantime, we will have economic chaos.
Right. Well, thank you so much, Ms. Ginger Chapman, for that crucial analysis